Hey guys, welcome back to my channel, or if you're new, welcome. I want to talk to you guys today about really just investing and how I'm investing and what the Wall Street's not telling you and things of that sort. So let's get right into it. So the first thing I'm going to talk to you guys about is the difference between trading and investing. There's a big difference that people don't even know. And so the difference between trading and investing is when you're investing is when you're holding a stock for at least a year. Trading is anything other than that. So if you're not holding a stock for at least a year, you are trading. It doesn't matter if it's from swing trading, day trading, hourly trading, trading in seconds, it does not matter. You holding a stock for a year or longer is called investing. And so there are actually different types of investors. I'm going to get into that later in this video. The reason I stopped trading in the stock market because I realized it's financial suicide, just to like sum it up. So me trading for 2 years in the stock market, or while I was trading, I was down. I'm profitable now. I didn't become profitable until I started investing in the stock market instead of trading. So I think I think no one, especially new people, newcomers to the stock market, no one should be buying and selling. You're just buying. Find a stock you can just buy, you really feel comfortable with holding to that. And definitely pick up a book if you do want to get into the stock market and you want to actually make real money. I definitely advise you guys to pick up a book and about investing and not trading, because trading is not going to get you far, especially if you don't have enough funds. So the thing about trading is it got so bad to the point where people were losing their life like savings and stuff. They had to make it's three trades in within 5 days. So if you're under $25,000 in your account, so the fact that they have to do that just shows that it's financial suicide. And that's been a rule in the stock market for a while now, but at one point it was not, and people were just losing money because they just decided to go in there, think they know everything, or think they know anything, and go in there and just lose money that way. If you're not if you're not trading with 25,000 or more, you should not be trading. It's just end of story. No types of trading unless you really know what you're doing. And if you do know what you're doing, kudos to you. I do want to briefly go over the steps that I took to really progress in my journey again and like go into detail in this video. So the first step I did take was I built a portfolio in the stock market. I did that by building up a strategy, and that is the way to make money in the stock market, through investing, building a strategy. So my strategy is to give you guys an overview of how I invest. And my research, it does take hours upon hours to really get the stock that I want, because I feel like you should, wherever you put your money as if you had $1 million. Like if you had $1 million, would you make that same trade? Think of that when you put money in any stock or any company. Because if you think that way, you won't really ever lose money, because you probably won't put the money there. Let's be real. The other step I took is that I removed all distractions from my life. And some people are offended by this, and I understand that. Because at one point I was very social, talked to a lot of people, and now I just don't. So about that, I realized that social media, social status, how what people think of me, I just do not care. Like I deleted Snapchat, deleted Instagram, deleted really all social media. Now the only reason I actually have social media is to really send notifications to, hey, go check out my YouTube video. And that's really it. I don't really go on social media. It's really a waste of time in my opinion. I have no interest in social media. I don't post pictures. I don't see I don't find the interest in social media anymore. And it takes up so much of your time, and it's very it's spiritually draining, and it really drains your energy to just go through, be on that all day and have that run your life. So I removed all of that, and now I focus completely on investing, YouTube, and building wealth. And that's really all I have time for in my that's what all I make time for. So anything else that's not in that, like in those guidelines, I do not make time for. I have no interest in making time for. The next step I took, I started reading books. And so before I started reading books, you couldn't pay me to pick up a book because I just did not see the point in picking up a book. It's crazy how it's a whole nother world when you read, like, that you're in when you like reading books and become educated in whatever you're reading, really. But while I'm doing whatever I'm doing, I listen to audiobooks. And I just found that I literally I'm soaking in knowledge, and so I just keep listening over and over again, find new books, find the next book I can read or listen to. It's the same thing, just yeah. It's crazy. It's crazy how it's just a whole nother world in the world of books and knowledge and education and things like that. And I actually so the thing about books and me, I read books for knowledge, not entertainment. So I don't read books, and I apply the books I do read. If I feel like it's a good book, I apply it to my life. I don't just read. So that's what I mean by reading for entertainment. Like if you the book I recommend if you're watching this video, the one book I do recommend to you if you really want to like know how the rich stay rich and how to become rich is to read Rich Dad Poor Dad. That book will tell you so much. And the thing about Rich Dad Poor Dad, people read Rich Dad Poor Dad and don't even apply it to their life. They continue to do what they're doing, or not necessarily. I'm not saying don't stop doing it. Just completely stop and drop what you're doing. I'm just saying like you can apply some principles to your life if you want to get rich or you want to do something. Basically, if you want to get rich, there's things in that book you can start applying. So you don't have to apply everything all at once. You can apply it slowly. Now, if you don't want to get rich, don't even read the book. It's no point. But if you do, I definitely highly suggest reading that book. So I did want to touch on the different type of investors. So the two main types of investors that I distinguish myself between is the aggressive investor and the defensive investor. I'm an aggressive investor. I try to squeak out every single penny. I'm on the market every day still, even though I'm an investor. I'm holding. I'm looking for stocks I can buy and just hold for long periods of time. I actively do research to get into stocks and just hold them. The way I invest aggressively is that like I try to squeeze every single penny out of that stock like while I'm investing into it. So while it's high, I'll try to sell a couple shares when I know it's going to drop, or when I feel like I have the information that it's going to drop, or I've seen some type of information that's going to drop, like earnings. Let's say earnings. So GILT earnings came out, and I feel like a lot of stocks is like the drop when earnings came out, no matter what the earnings are. In my opinion, I know it's absolutely wrong. Don't even comment. I know, I'm aware. But in my experience, a lot of stocks that I've had in the past, earnings hit and them things drop to the ground. So that's actually what happened with GILT. So what I did, I sold like half of my shares up at the peak, which was like 22, and actually recently it dropped all the way down to like I believe it's at 15. It went down to like I believe 15 flat or 15, whatever you want to call it. I actually sold half of my shares and put another shares in at. I bought. I waited. I saw it drop down to like 16.30, and I put shares in. And like this is now it's a hype stock. It's a hype stock everybody should get into now, but I've actually been into it. So that's what you want to do when you're investing. You want to find stocks. You don't want to look for hype stocks. You want to find stocks that no one really knows about. You want to either find, if you want to invest the way I invest, you want to find stocks that no one really knows about. You want to do your research, check the things like the balance sheet, and then try to get into it as early as possible, or find a good price to get into it. And once you get into it, just watch it grow and try to squeeze every penny out of it, which I do. Another technique I use with the buying low is that if I do see a stock, instead of selling my shares high, if I do see a stock, or if I don't get a chance to sell while it's high, if I do see a stock drop down to the ground or to the dirt, or at least 5%, and because 5% is a lot in the market, if I do see a stock drop down 5% that I'm holding, I go buy more shares. And I go buy more shares because I buy the dip while I'm already in it instead of buying high and selling low. Because when you buy high and sell low, that's what Wall Street has dug into people's mind. That's what they've told you, and that's not the way to make money. You're not gonna make money that way. You're just gonna continue. It's a continuous thing. You're gonna keep doing it. There's no way to actively, there's no way to literally pinpoint the perfect price to buy into a stock, and it won't it won't drop. Like there's no way to pinpoint that. So another strategy I use is I go down when I see it drop 5-10%. I go buy as many shares as possible, and then just watch it. I'm watching it grow because I know over time it's a long term stock for me. So I'm gonna keep buying the dip no matter how many times it dips. And the only way I would like completely sell out of a stock is, let's say, because there are times where a stock would like drop and it has no point. It has the point of no. There's stocks that go down to the point of no return, and the stocks like that are. There's stocks that go down to the point of no return. The stocks like that are the stocks that are like fraud. So I remember back when I was trading a while ago, there was this Chinese stock, and they actually forged all their, like, I guess not tax documents, but yeah, earnings, tax documents that they have to submit to the whoever the not the broker, but the whole market. They have to submit to the market so they can the news and stuff. So they actually committed fraud, and I mean that thing dropped to the ground, and people like they literally they halted all trading on that stock because they did fraud, and like they somehow got back up running. I don't know how. It was like some Chinese tea company or something like that. That was just one of the experiences I've seen where a stock would go to the ground and like just not, there's the point of no return. That's the only time I would sell a stock, if I see some type of news like that of fraud, or their product killed someone, or things like crazy things like that, like you'd never see, like Microsoft computer. If I'm investing in Microsoft and Microsoft computer got up and killed somebody while they were sleeping, something like crazy like that. I know that sounds ridiculous, but like things like that, that's when I go ahead and sell the stock, because it's gonna go to the ground. Like Boeing, for an example. So Boeing's a pretty big company. So what Boeing did, they actually they they had a malfunction in their chip or whatever. They had a malfunction in one of their chips in their planes, and while it was flying, it ended up crashing and killed what, like I think 300 something people, or 244, some a hot super high number, over 200 people. News like that, you get out the stock. That stock dropped to the dirt. I mean, Boeing had to pay a multi-billion-dollar payout, probably to the families, just a settlement. They have to pay out a settlement so they wouldn't have to close down, because killing people with your product is not ethical, and the only way they can fix it in like, of course, America and everything, pay money. So that's what they did, and that's why if I ever see some news like that, basically I just want to say all that to say, if I ever see some news like that, I will be out of that stock in an instant. So I think I talked to you guys about the defensive investor. So a defensive investor is an investor that does various amounts of extensive research to really dig into a company, to where they can just basically put their portfolio on cruise control, which is what really a lot of wealthy people do. So they don't have to sit there and actively trade. They don't want to act. So they'll do crazy extensive research on like, let's say 10 or 15 companies that they want to pour their money into, and because of the amount of research they do, they can keep it on cruise control no matter what news comes out. I mean, not necessarily what news comes out, but no matter what happens with the company, they make sure to check their balance sheets and things like that, like deep into detail, their past like, not past investments, but like their past history. They basically do crazy extensive research to where they could put their portfolio on cruise control, to where they don't really have to really mess with their portfolio at all. They can wake up every 2 months and look at their portfolio if they really want to do that. But people defensive investors like that set price targets and things like that, to where they really don't have to invest, or they don't have to actively be in their portfolio daily messing with things. And that's another way to go. Obviously, the return won't be as great as it could be when you're actively investing, because you're actively investing as in squeezing every little penny you can out of that investment. So it's just whatever your preference. it's really your preference between active and passive. I did want to talk to you guys and tell you guys how I actively fund my portfolio in the stock market. So the two ways, I actually have two sources of income. The ways I fund my portfolio, the first source of income is actually Bath and Body Works. I'm a sales associate there, and I work there. I guess it really fluctuates when I work. Honestly, it's not ever like a set amount of days during the week and things like that. The second source of income is I actually DoorDash every day. So I DoorDash, and so with DoorDash, I'm actually gonna make a video on that. But there's a lot that goes into DoorDash to actually make some good money DoorDashing every day. So I guess just stay tuned for that video. I don't really want to go deep into explaining it because it's a lot. It's probably gonna be an hour 30 between 15 to 30 minute video on how I make money through DoorDashing, like good money through DoorDashing. If you're my age, I guess you can call it good money. Whatever good money is to you, what good money is to me. I definitely encourage you guys to like and subscribe. If you're new, check out my intro. If you haven't watched it already, if you did watch it, thank you. Please leave a like on that. Subscribe to the channel. You know, join my journey into growing my stock market portfolio to 1 million through aggressively investing. And I hope you guys have a great day. And remember, what the mind can conceive and believe, the mind can achieve. Don't ever forget that. It comes from yours truly. It's like, but definitely, I actually believe in that.